Greetings, beloveds. With 1 hour to go before the end of the session for March 24th, 2023. Let's take a look here at the weekend market analysis, and we are beginning here showing the markets. And again, 1 hour to go. We are seeing a little bit of a rebound of the lows of the session. That's the general market. And as far as the cryptos are concerned, BTC down 2%. Ethereum for the day is down about 3.27%. This is the weekend market analysis for March 24th, 25th, 26th. If we take a look at the weekly performance, we can see that the general market up about 1%, which in a way is a surprise given all the bearish sentiment. And we can see the cryptos are down anywhere, and I'm saying Ethereum and Bitcoin, anywhere from 1 to 1.5%. So a little bit of a down week for the cryptos. All right, let's begin here with the S&P 500 on the 5-minute chart. RSI setting of 26. I'm going to draw a line connecting the recent tops and a line connecting the recent lows. And you can see we are forming a wedge here on the 5-minute. So throughout the session when the market was making these lows here, all these lows have come with support on this line. So definitely a wedge. And here over the last, let's call it hour or so, maybe 30 minutes, we tagged the top side of this RSI topside line. And so we are within the wedge. So by the close or sometime early in the new week, either we're going to get a break of this wedge in the short term to take things down, or we break out above this range and we see the market show a stronger close maybe for the week or the beginning of the week. But really, it's the big picture, in my opinion, that is going to determine the next major big trend. The NASDAQ, if we take the recent weekly closing highs, as I've been pointing out, take this weekly closing high and we'll find a trend line. It should be something like that. I believe that's a trend line right there. Do it like that. So this trend line comes close to that weekly closing high, and then this tops here. Remember, trend lines are not a hard science. It's pretty much a lot of estimation. But what I'm saying here is we've come back. So we moved above the line. I think we've come back and tested this 2 weeks ago and we've bounced. As far as the NASDAQ is concerned, net, that's not a bad sign. Something else also I've been trying to highlight here is this crossing over, this moving averages, the 34 and the 13 week. So 13 week and 34 week moving averages are crossing over, and they're crossing over in the positive bullish direction. So net, I would say that still does favor a market that could be sideways, but ultimately favors the upside. We had the exact opposite here where the moving averages crossed over to the downside, and of course we have this pullback that has taken place in 2022. Now we are looking at the possibility of stable to upward trending market, in my opinion. We would need a breakout on the weekly for the NASDAQ above this range, which is the highs for this week. So let's call it at about the NASDAQ moving about above 12,013. So movement above this area would be bullish, and that is what the bears would not want to see. The bulls would want to see the market clear this range. Another way of looking at it, if we take a look at this breakout here, in a sense, we've already recaptured the level above this. So this could have been a trap zone. Now we are within this box. So a breakout above this box, generally or definitely a breakout would be a good sign to the upside, and a breakdown below this range would signal a market that has an appetite for lower prices. So that's the price action there. Another thing I would look at here is the RSI work. Of course, I personally like to focus on the sentiment, which is what I believe the RSI gives. Of course, a couple of weeks ago, I talked about this line and we found support exactly on this line. Now we can see that there's the opposite, which is the top side line, which is coming in view, and we can draw it as such. So again, just like the 5-minute, there's a wedge formation taking place. Ultimately, either we break out above this range and move higher, which would be a bullish signal, or we break below this area and we start going down. So week to week, I would say the market is at the very worst stable, and at the best is bullish, in my opinion. The NASDAQ daily, now that we have a flattening 200-day moving average and an upward sloping 50-day moving average, any price breakout given this setup, let's say a breakout above 12,000 on the NASDAQ, would really set the stage for a strong short-term move to the upside that might last a couple weeks, maybe couple weeks, couple days, but at least a breakout here, given the setup of the moving averages. One needs to be careful if you're bearish, because a breakout given this setup could lead to a very strong sharp move in the short term. By the way, going back to recent lows, if you remember, we had been looking at this area here, and I was highlighting and I showed you that if this is where the market finds support, expect the market to come back. So there was this possibility of a support based on my uniformity concept, and the market held here and we've been up since. So right now, I would say if you're looking for a direction, we are above the 50 and we are just above the 200-day. Net, it's a sideways to higher market, in my opinion. The Dow weekly, we have a bearish crossover here, we go down. We try to stage a strong move with a bullish crossover here, but that was not very fruitful. Now we are looking at this bearish crossover, which is directly contradicting the NASDAQ, and the Dow is pointing down. So the Dow is giving us a little bit of a different flavor. Now, if we take a look at the trend line, if I draw it as such. So what I've done here is I've taken the weekly closes, this weekly closing. There's a weekly closing right there and this one here. So just like the NASDAQ, we came here, we touched the backside of this line and we found support. Something else also I would consider is if I take a look at the simple RSI line connecting recent lows, I would say that as long as this line is holding, the Dow should also be stable. Now, if this line breaks, and then there's a bearish case to be respected. Right now, we are positive for the week. The Dow is holding that line. I would assume that that is telling us that net, this is a market that is still stable and could ultimately over time be setting the stage for a recovery. Now, of course, given the crossover of the moving averages, a break of this trend line would be a sign that this market is now for sure looking to go lower in the short term. S&P 500 on the monthly, we can say that since November, we've been in this range based on monthly closing basis. So yeah, sideways. And this is a good representation of where the market's been trading in a range since November. Ultimately, bulls want a breakout above this range and bears would be looking forward to a break of this range if the market is to go down. But right now, I would say both sides should agree that we're in a sideways market and have been in a sideways market over the last 4 or 5 months. S&P 500 on a long-term monthly chart, personally, until we break this RSI lows line on the SPX, this is still a stable to bullish market. Irrespective of the news, irrespective of the bearish sentiment, you'd need to break this line first and foremost so you can have a strong setup for a big down leg. That setup is nowhere on this chart. And in my opinion, this is a market that has been trading in this range for quite a long couple of months. Now, let's remember all markets have their leaders. Here's one that we had a breakout alert, I believe here last year, and the stock has essentially doubled in price since, and this is one of the leaders. The chart looks fantastic, I have to say. The other stock that is also doing well, and it is AEHR. Again, if you take the lows, this is lows at under 8, now trading in the 40s. This has happened since last year. So some stocks are doing well, and even some large cap stocks like NVDA. NVDA is in the process of tripling its price off the lows. So yes, there is the bearish case that is always present, but underneath the market, some things are having a tremendous run over the last couple of months. Taking a look at the VIX over the last 2-3 weeks, I've been proposing this line here. This is the 2-year weekly, and my suggestion was that this is potentially where the VIX would struggle. And yes, that has become true. Even though it opened the week, and over the last couple of weeks, there's been an attempt by the VIX to move higher. But ultimately, the resistance has come on the RSI on Q. So the pullback by the VIX makes sense. And then there's the 5-year weekly, which I was showing you over the last couple of weeks. And this also has come in play. If you follow this, this was, I don't want to say easy, but visually the sign was there for potential resistance. So the market coming back, the VIX resisting or finding resistance makes sense based on the charts here on the weekly RSI. So we all know that the financials are in the news, and it looks like everybody thinks it's going to be 2008 again. Personally, I don't think so. The reason is if I take a look at the XLF, we take this break here. And by the way, the line I'm about to draw happens to be at about RSI 61.8. This simple line here is telling me that until we clear this line, this is a potential trap zone and could be an area where the FAZ could stall and the financials could find some floor and start coming back after a big sell-off. So if the financials are going to go down, FAZ would have to break out above this line. In my opinion, I don't see it on the charts yet, so I'm leaning towards resistance here until I see a breakout above this range, which is above RSI 61.8, which would be a price breakout for the FAZ above, let's say, 25 on the weekly. So let's say over the next couple of weeks, if we have movement, we have a base here and then a breakout. That breakout would have to suggest that we pay attention because it would mean it has cleared this RSI line. So in my opinion right now, the financials, as I've been stating. On the weekly, go back and check the weekly analysis on XLF. They seem to be within an area for weekly support, so I don't think they're going down in the short term in my estimation. The Canadian market, I'm going to offer two lines. First line is the recent RSI lows line, and let me draw that a little bit differently, but you can see what I'm getting at here because it's a theme that has been showing up over the last couple of weeks. So there's that potential for support or break. Right now, it is positive for the week, so we have to assume and respect that it is up for the week. That's a positive support on the line. And the other line to consider is based on the uniformity concept. So this is the prior breakout line. So we can use that information. Breakout here led to nice prices. We came off major lows. And if we take that RSI level and extend it this way horizontally, guess what? The market is very aware of this area. And we can see that if this holds, it makes sense that in the coming weeks and months, we gradually build to the upside. Now, of course, we have to be aware that markets can change their mind because a break of this line would mean that actually we go lower. But right now, I would lean towards support because that's what the charts are showing. The Bank Nifty, I'm going to show you two lines. Again, similar to the Canadian market, we have this breakout. There was a little bit of a wedge formation here. Also tiny, but it was a wedge. This is what is being tested in my opinion. And you can see that if in the coming week, if not weeks, if we hold this area, anticipate that the next meaningful direction is for a recovery move to the upside. That's one way of looking at it. The other way is to take a look at the 5-year weekly, which I've been proposing for many weeks. And you can see here that until we break the RSI lows line, chances are this is also a market that is pulling back to within an area where it should find support. So support here would make sense. A break below this line, as we've seen with other charts, would mean that yes, there's a deeper correction. So in my opinion, these two lines here could offer the support the bulls want, and a break of those two lines would mean that we are going lower. This is the gold GLD monthly chart, and I have to confess, I'm not a fan. Why? Because it doesn't meet the minimum requirements of a quality breakout. So yes, I'm pretty sure a lot of people are watching this and thinking that this is breakout mode, but it's a poor quality breakout, end of story. The RSI is not where it needs to be. It would need to be at 3-year highs or above 69.1, and we don't have either of those. And none of the MACDs are moving to 3-year highs. So which tells me I need to look elsewhere for quality breakout. So yes, gold could still have a little bit of an upside, but in terms of a long-term bullish move, it's not there in my opinion. And in fact, with 1 week to go before the end of the month, it would not surprise me that this area here, which again happens to be around that RSI level just under 61.8, chances are month to month, this could be, and even higher, could be a trap zone. In other words, gold is showing a good move this month, but is it all that powerful? Is it going to take off and move higher? No, in my opinion. Why? Because it doesn't meet the minimum requirements for the ultimate Mwade breakout at the very least. On the weekly for GLD, it would need to clear this, let's call it about 185-ish, which is the weekly closing high going back to, I believe, February of 2022. It would have to clear that and stay above it if it's going to attract institutional buyers. Right now, we can see over the last couple of weeks, last 2 weeks, it's been unable to stay above that range. So that's another reason to be skeptical a little bit here, in my opinion. And also, we made this improvement in prices, and this improvement in prices is coming with a little bit of a decline and also happens to be around RSI 69.1 rejection area right here. So I'm leaning towards gold, especially after a nice couple of weeks to the upside. It seems to be running out of upside momentum in the short term. And more importantly, as I stated on the monthly, it doesn't have what I would look for a quality, powerful instrument. If we take a look at let's take a look here at the weekly, we change colors here. Another thing here is this break led to a little bit of a sizable drop here. And I would estimate that in the coming days, if we end up RSI moves below this blue line, then I would suggest anything below the blue line would mean that gold's run in the short term is over and that there's going to be a pullback in store as far as gold is concerned. So it's going to take a lot for gold to convince me that it's going to be leadership. Right now, it looks like to me a nice move, but could be stalling at any point in my estimation and opinion. Taking a look at crude oil by way of USO, we can see, yes, a big down month, down about 9-10%. Why? Because the RSI on the monthly is moving below 50, as we discussed for many months. So that makes sense. If we take a look at the weekly though, we can see that that move could be coming to an end because now the RSI on the weekly is finding support exactly where it needs to. So I would say as long as this line is holding, as we've seen with other markets, it suggests that now crude oil is on the mend and could be at the very best maybe forming a base here. Is it bullish? Not really. But is it bearish? I think as long as this line is holding on the RSI, this support line, we could be now in a support sideways market as far as crude oil is concerned. Taking a look at the XLF, of course, this pullback is consistent with what we've been discussing over many months. There was a couple of failed breakout attempts here, especially on the weekly, but this is the monthly. There was a failed breakout here, and then we broke below the base right there. So this move down over the last month is consistent with the bearish action. And so I can say that the energy space has lost the leadership in the market, but just like we see with the USO, doesn't mean that it can't reset. Right now, it's in the process of resetting because if I take a look at this breakout here that took place, this breakout here of October 2020 lows, and then of course they went on a major run. I mean, they went from almost making new lows to becoming leadership in the market in 2022. This area of the RSI is what is being tested. It's not the first time it's been tested. It was tested here successfully for the lows there, it was tested here for the lows here, and now because it is positive for the week, is being tested and is holding. So as long as we are holding this line, as we've seen with other charts, I would suggest that this is now with the possibility of moving higher to sideways. And of course, as we've been saying in all the charts, a break of this range means we go down. And these are some of the charts that give me pause when but when people are bearish and I don't see it on the charts, I have to default to believing that the markets ultimately is set to move higher. BTC, we can see one of the things I have to mention here is the crossover. I've been talking about this crossover with the possibility of taking things higher. All right. That was it was there for everybody to see. Also, we have this flattening out 13-week moving average. That's another key. At any rate, as long as BTC is above this range, it can even pull back maybe by a thousand points or so. But as long as it is above this line, the blue line, which is at about, let's call it 23,000. In fact, let's call it about 23,000 or so. It should be fine even with a pullback. By the way, on BTC, take a look at this example of how a simple line of the RSI can be such a powerful guide. And this is some of the lines that I've been using over the last couple of weeks. A breakout here turns into support, turned into support here, and we are higher. So again, if we take this blue line, this breakout above the blue line, what this tells me is that as long as we are above this blue line, and this can be a situation that can take months, if not years, as long as we're above the blue line, BTC and the cryptos are still in a bullish trend. If I take a look at Ethereum on the 4-hourly, there's also this line, and I've drawn it this way because it gives us a breakout right here, which is this movement, and it's turned into support ever since. So even on the 4-hourly, until we break this blue line, which could happen at any point, but as long as we're above the blue line, day to day, Ethereum is still pointing to be sideways to higher. Now, in the short term, if we break this line, then that invites a bigger correction in the short term. But right now, as long as we're above the two lines, as long as we're above the topside line, the previous topside line, I would say even Ethereum is showing signs of a market that is still very strong and could see sideways to higher prices. Another way of saying this is that as long as we are above the 50 on the 4-hourly, then we are still in a market that is sideways to higher. If we are going to go down, then the RSI would have to lose its ground above 50 and stay below 50, just like we did here for this pullback zone. So the charts are saying we are still in a strong sideways to higher crypto market. Oh, by the way, this is Bitcoin. My bad. Let me go to Ethereum on the 4-hourly. I think it shows this a little bit better. So this is Ethereum on the 4-hourly, and what I was drawing was this line here. So Ethereum 4-hourly, same thing as BTC. We have this movement here, turns into support, turns into multiple supports or attempted supports. So as long as we're above the blue line for Ethereum, this is still a sideways to higher market. Of course, with the understanding short term, when we break below the blue line, then that would be short term, we are going lower. The key, in my opinion, is monthly chart where the RSI is trading. Right now, BTC is back above 50, which might explain why we have this 20% gain for the month. And as long as it is pushing above 50, expect the momentum net, not day to day, hour to hour, but net, the momentum to be still to the upside. And if you take a look at Ethereum is trading slightly below 50 at 49.5. And if it also retakes the level above RSI 50, expect a big positive monthly move and closing towards the highs of the month. So I personally don't see the bearish concerns out there. I see a market that is stable to bullish. I am Eric with Mother.com, and I leave you as I found you in the love light of the one infinite creator. Go forth rejoicing in the power and in the peace of the one creator, Adonai.